you have two kinds of losses that you need always to have also to categorize. You have the expected losses and the unexpected losses. Expected losses is what we expect when in any business, like if I'm in a bank, I'm gonna give loan. So I know that there's always that risk that customer will not pay off their loan. And this, I can expect it because I have historical data. I can look at what was the percentage of customer that didn't pay off their loans. So this is expected loss. We are okay with expected loss. This is something that we can mitigate, quantify first, mitigate, and decide, what will be our risk appetite. What we're a bit more worried about is what is unexpected. Unexpected is what happened in 2008, is what happened during COVID. Something that, an event that has a lot of repercussion on your business, on your loss. And this doesn't matter which model you're using. It's very difficult to quantify unexpected loss. I mean, you're in financial mathematics, so I'm sure you have a decent understanding of the normal distribution. To calculate the value at risk, we're using the normal distribution. Why? Because we want to say that, okay, we have 5% chances that actually we will achieve a loss of a minimum of that amount. So this is based on historical data most of the time. So those are expected loss. And what we saw during COVID is actually value at risk model were not very reliable because none of the value at risk model actually showed the losses that companies, firms, banks, etc., investment company faces during the COVID, for instance. So risk management, our role is to manage the expected loss. Either we eradicate it or we mitigate it. And we need to also manage the unexpected loss. So, and something very important, and this is part of the enterprise risk management, is we want to know this bank, how much risk is it willing to take? And this is decided from the top of the hierarchy of the bank. It's the board of directors. They will decide this is our risk appetite, this is how much risk we're willing to take to achieve a certain profit. We call that the risk appetite. So what are the different steps that we take to actually do and manage our risk? We identify the risk. We quantify the risk exposure. And that's why we always welcome people with a very good quantitative background for that step. And also we consolidate all the risk, and we can see that altogether, what is the consolidated effect of all those risks? Because there's something that we call the correlation risk. For instance, we know that whenever you take a loan to pay for a mortgage, when you want to pay for a house, you take a mortgage. Actually, if you face any issue during a certain time, economic crisis, recession, actually you have more probability of defaulting on your loan. But at the same time, the value of your property will also decrease because we're in a recession. This is a correlation risk. It's amplified the actual risk. So this is why when we're looking at the risk, we're not looking at risk in different boxes. We try to look at the whole picture at the end. Then we develop a risk mitigation strategy. Should we avoid totally the risk? Should we transfer it through insurance? Should we mitigate or totally assume the risk? This is our risk appetite. Then once all is done, set, we assess the performance. We look where are we at now? Are we taking too much risk? What is the benefit of that? This is the last step, and to see if actually our strategy is successful or not. So this is how the risk management function in banks, financial institution looks like. It's divided in two. You have the financial risk and the non-financial risk. Financial risk, the big part of it, the big actually even headcount is the credit risk department. They will look at corporate loans. They will review each loan application of the customer, assess the risk, etc. Then they will look at the portfolio, what's our corporate loan portfolio look like, which risk it carries, because what's the main risk of credit risk is the default risk, that actually the client will not pay back. And you have the consumer credit risk. So this is the loan that each one of you took. What is the risk that you will default on that? Then you have the ILM and market risk department. You can look at credit risk as the small, medium-sized money. ILM market risk department looks only at the big money. We look at millions because we're looking at the full balance sheet of the bank and we're trying to assess actually, if I'm looking at a small individual loan, it will not have a direct effect. Millions, we look at from 5 million KD loan to $1 billion senior debt that we issue, for instance. It's big amount, and we're looking at this effect on our balance sheet and our net profit at the end of the year. It includes also the market risk, which is the profit rate risk, the equity price risk, FX risk, etc. Liquidity risk. Does the bank have enough money, funds to actually meet its obligation? And we have the treasury mid-office. I will explain that later. And of course, the non-financial risk, it's cybersecurity. It's a team of ethical hackers making sure that no one hacks your bank account. You have the operational risk, making sure that all the processes in place, that there is no fraud, etc. So market risk. Market risk is the risk that any change in market rates and prices ends up in a loss for you. So how do we manage our FX risk? First, what is FX risk? The FX risk is the risk that currency change, and we're not following the. Usually they should have a very good balance, equilibrium in the market, but sometimes it doesn't happen. So there's always this issue of arbitrage into currency. The good thing about us, we're located in Kuwait, it's a very strong currency, and our main balance sheet is in KD. But all the banks in Kuwait do have dollars, they do have euros, sterling, etc. Some banks have exposure through their subsidiary in Egypt, etc. This would make you have big structural position in currency. Imagine a bank that has activity investment in Turkey. Recently, there was a big devaluation of the Turkish lira. This has an effect directly on your P&L. So what do we do to manage it? We set limits. CBK, the central bank of Kuwait, does have regulatory limits. But on top of the regulatory limits, banks put limits for each currency. This is what we call our internal limit. This is what risk appetite we have for various currencies. Profit rate risk. Profit rate risk is basically the risk that CBK will increase its discount rate, but they will increase the cost of deposits higher. This will create an imbalance. This will have a direct impact on the profitability of the bank. And also, you can look at it as you're investing. Banks usually they have a portfolio of fixed income, bonds or sukuk, depending if they're conventional or Islamic. Let's say that today you decide to invest in one sukuk and you will have a yield of 4%. You have a profit rate risk if you don't hedge it. Why? Because maybe tomorrow the rate will go higher and you could reach 5% yield. So you will have a loss opportunity. So that's why banks, financial institutions usually decide to hedge. The issue in Kuwait, there is no market for hedging. You do not have product that we call interest rate swap or profit rate swap in Islamic banking. This exists only for dollar, euro, etc. KD does not have that. So banks knows that they do have to carry a profit rate risk. This is part, it's the cost of making business. But we put in place mitigation technique to limit this risk. Liquidity risk. So this is something that is very important, especially since the crisis of 2008. We want to make sure, and not only us, regulatory authority that goes even like not only the Central Bank of Kuwait, Basel is a town in Switzerland, and they have a committee that issue most of the banking regulation. They have various ratio that banks need to comply to make sure they do have enough money to meet their obligation. First, like in Kuwait, you're not allowed to to give loans more than a certain amount compared to your deposits. So you need to have a certain amount of deposit, and you're allowed to give only 90% of this amount in loan. Why? Because we want to make sure that we can always repay our loan. There's new ratios since the 2008 crisis that was put in place. Those are called liquidity coverage ratio, net stable funding ratio. The liquidity coverage ratio is to ensure that the bank, if tomorrow there's a crisis, all of you run to your bank, you withdraw money to make sure that the bank can actually pay that money. So what we look at, we're looking at our assets, what the bank owns that is extremely liquid. We call it the high quality liquid asset. We make sure that we have enough of those to sell them immediately in the market and give back the money. Then you have the other ratio, the net stable funding ratio, because all assets are not the same, all funding is not the same. You need to make sure that you have enough stable funding to meet your assets. It's more like a long-term, not a stress scenario, but to make sure that actually the composition of your balance sheet is stable. So the last point is about equity price. Let's say the equity risk. Why is it important? Because maybe some of you have invested in the Kuwait stock exchange, the Borsa, and you have seen the market going up and down. So what consequences it has on banks? One of the main consequences, some banks do have their own portfolio of equity for their own investment, like we do for fixed income. But the main thing about this is that customers to whom we give loans, they give as a collateral shares of company they own. The collateral is when you want to have a loan and you tell them, okay, give me the loan. In case I default in payment, you can actually liquidate what I own. I'm giving you the custody kind of your shares. So whenever there's a change in the Kuwait stock exchange and banks like us, we will have collateral that are changing in value. We're doing a daily valuation. We're looking how much they're worth, and if their price go down, we'll have to call the client and say, you need to top up whatever, because if you're defaulting and I'm liquidating the stocks, you'll not be covering the full amount. I'm really simplifying the procedure, but I want you to have the idea. So this is what we call equity risk. So again, all these risks are mitigated through our risk appetite. What did the board, the management decided? What is our appetite? Should we be close to the limit that are being set by the CBK? Should we have buffer? This is the concept of having internal limits. So this is about asset and liability management, something that we do, and I personally think it's very interesting. It requires a lot of quantitative analysis, a lot of modeling. So what do we do when we want to manage and analyze our balance sheet? First, we're looking at the balance sheet, how it looks like. You have your assets, your liability, your equity, which is your capital. That you want to look like you want to know how will it look like in 2-3 years? How will my liabilities evolve? Like I know that they are increasing the interest rate. How will it affect? Can I actually predict how much will be my profit at the end of the year, or in the next 2 years, the next 3 years? So we do modeling. We take the data, we take the full balance sheet, we make many assumptions to exactly have a picture of our balance sheet in 2 years, in 3 years. And for that, we need to make scenarios. We need to say, okay, the Federal Reserve of the United States will increase their rate. CBK most probably will follow. So what does it mean? Actually, doesn't look good for me because CBK sometimes increase the deposit rate higher than the CBK. So I'm paying more expensive deposits, but I'm not getting that much more on my loans. So we need to decide, should we grow the portfolio that much? Should we reduce the growth that we're budgeting? So this is what do we do in asset liability management. And also, it comes like when you have the business, the corporate, the sukuk team, fixed income team that comes with a proposal. They say, okay, I want to buy 100 million of this sukuk that is giving me a yield of 4%, 4.5. They will come, they have to come first to us, and we'll say, no, actually, it will not get that much because we do pay our dollar deposit way more because there's a slight liquidity crunch in the market. You need to aim for higher yield investment. Or if you do it also, we need to hedge because maybe interest rate will continue increasing. And all this requires a lot of quantitative analysis and a lot of valuation because we need to understand that as soon as we use derivatives to hedge our balance sheet, we need to know what they are worth. There is also the part on capital planning. You know that CBK needs to actually, they have various regulatory ratio for the capital. Banks need to have a certain amount of capital, which is equity, to sustain any shock that the banks might face. So this has to also be part of the planning because, again, if the banks are growing fast, like my bank is growing fast, we're increasing our assets. We have to make sure that our capital will increase as much to be within a proper risk appetite. This is what we call capital planning. And this, usually when you want to increase the capital of the bank, it costs a lot. It costs a lot to the bank. Banks will just issue shares in the market, or they will decide to go on the fixed income market and issue what we call additional tier one, sukuk, etc. This is costly instrument for the bank. So when you do your planning, you shouldn't just give estimation. You need to be pretty sure about what you're showing. And the modeling that we're doing, that is very, it's quite difficult, and that's why usually we tend to look for people who have a very good quantitative background for that. What we have us in Bouillon and some other banks, it's called Treasury Office. Treasury, first, is a department that deals with money, that manage money, etc. So huge amount, they place money, millions, 200 million, 300 million KD. I'm talking about really big money. So if something goes wrong, we have to make sure that actually a proper process is in place, just to make sure that actually whatever action they take is done for, they do it based on actually analysis, that they will not borrow in the market $500 million for no reason. So Treasury Office is there to actually monitor all the treasury activity, check how much money we have deployed all over the world, because of course banks in Kuwait do not deal only with Kuwaiti bank. We are very active all over the world. And we do the valuation of derivative. As I told you, we need to know how much is worth the derivative that we have. And there is also a task that they are doing. It sounds a bit like complicated the way it's showing, but the purpose of that was actually to show you that working in risk management requires a lot of discipline. It's not like you go to work and you'll see how much. No, you need actually to have various tasks to do your task, because you miss one thing, it can cost a lot to the banks. So you have various tasks that you need to complete every day. You need to check. You need always to have a good sense of initiative. Each time that you see something that is not wrong and it does happen, you have to report it. It's quite, I believe, an interesting role. And I would call Abdelaziz, that is in doing actually treasury in the office, to tell you more about the experience, daily experience about working there.
السلام عليكم. معاكم أخوكم عبد العزيز المهيني. تخرجت من UM ب 2019 شهادة محاسبة، ودشيت بوبيان. صدق إنه صار لي 3 سنين، بس اشتغلت ب 3 different departments. حاليا مع اريل بالماركت ريسك. بلشت بالفاينانس الجي ال كنترول، قعدت 1.5 سنة. بعدها نقلت للكوربريت، كان يعني فرق السماء على الارض، وايد غير عن الباك اوفيس. انصدمت من الكوربريت. وانا من زمان من ايام الجامعه كان عندي ميول حق الريسك، بس never had the opportunity وما كان في opening. فسنة ونص بالكوربريت، بعدين كان في opening، ف I joined market risk. وأتوقع كوني ممكن هني ممكن أصغر واحد من الموجودين السبيكرز، أتمنى أن أصغر واحد، فممكن أكون more relatable حقكم أنتم كونكم طلبة وممكن تخرجون بعد كم سنة. إن شلون حياة البنوك، إذا عندكم أسئلة، عندكم أي استفسارات عن الديبارتمنتس اللي أنا كنت فيها أو حتى ديبارتمنتس ثانيين، ممكن أقدر أفيدكم أو أساعدكم. فاي ما اتوقع اقدر ازيد اي شيء على اللي قالته اريل من ناحيه الماركت ريسك، ما شاء الله غطت كل شيء. فبس يعطيكم العافيه، واذا عندكم اي سؤال انا موجود ان شاء الله.